Greetings, everyone. I'm excited to welcome Niclas Lilja, founder and CEO at Younium. Nicholas, welcome to the show.
Thank you so much. Spotless pronunciation of my last name there.
I had so much going on in
Yeah,
my head there, just trying to make the best pronunciation
yeah,
possible.
yeah.
So hopefully got maybe part of the way there. But
Awesome.
Nicholas, great to have you on the show. And let's dive right in. Tell us a little bit about your background.
So my background is originating out of Sweden and been in the what started out as the software industry, then turned into more of SaaS maybe for the last 20 years. Prior to Unium, I actually did have a 1 year venture into some telecom thing, but after that I went into software supplier invoice automation. So in the sort of fintech or slash ERP space with transactions with a company called Medius, which was a great journey. And then, mostly targeting like production, manufacturing, retailers, etc. And then with Union for the last, what is it now, 6 or 7 years, finally, able to, do SaaS for SaaS companies. So I get all the good stuff.
Yeah, I love that. Yeah, SaaS for SaaS companies, and of course, your product near and dear to my heart as a SaaS CFO with subscription management and invoicing RevRec. But you said on the journey with Unium for 6 to 7 years now. So, what was that trigger moment or idea, or when did the Unium idea come about?
I would say like it was during my prior job. So I implemented the category leader in subscription management and building Zora back then. And I just saw, some potential to do things better and kind of got to it, especially in the area of, I didn't see that all companies were perfect. It wasn't like always perfect in the sense of the perfect pricing, the smooth checkouts, everything on credit card, no problems, just straightforward. And I guess my reality was a bit more chaotic, and I thought there were a need for something else, and basically got to it, trying to provide a lot of flexibility for advanced B2B kind of enterprise deals, but still in a product form. So it's not only like development, but actually something that you get started with quite quickly. So that was sort of the background. I think I've been looking for something to do maybe a couple of years, and then I had kids, and that takes some time. And then came across it. Well, maybe this is the thing, and basically got started. That's the short version, at least.
Hmm. Yeah,
It
the
was
short
probably
version.
longer back then. More
Yeah.
thinking, more I get. Yeah.
Yeah, definitely. And yes, important space here. So, yeah, let's talk about Unium. So, tell us what products and or services Unium offers.
Yeah, so we do subscription management and billing, very niche toward B2B SaaS and software companies. And actually, I would say even more niche than that, very much targeting sort of what we typically see as more advanced subscriptions, meaning that it's not all standardized. It's not like all high velocity, like the $99 online checkout, no options, but more like what happens when you go into like an enterprise deal and maybe you negotiate some terms. Maybe you have your own product, maybe you resell another product, maybe you have different modules, it becomes a bit more complicated. Maybe you have mixes of different uh, pricing options, etc. So that is typically the kind of companies that we serve. So quite niche. Looking at sort of what we do then is everything. I would say from already as early as whether it's quoting or it's some other way of sort of starting a relationship with a customer. It could be online as well. But then the subscription management, the versioning, making sure you know why you got there, not only where you are, pulling in like usage data and all that, doing billing, enabling different pricing strategies, accounts receivable, revenue recognition, and sort of tying that whole quota cash process together. And then also metrics. I mean, that's quite a thing in SaaS still, right? So be able to drill into it, maybe segment them. Uh, you're very much into matching revenue streams and cost in good ways. And I think that is one example how maybe it's not enough with one figure. Maybe you actually need to be able to segment it in the right slots. So that's one thing. Most companies want to integrate and automate things, not only have one CRM, have one financial package, have one, but actually get it to work together. So that's a typical scenario where we meet clients and support them. Um, but I think the starting point for most companies is really to have one single source of truth. Like where they most are today is like they have parts of it in a financial package somewhere. So they have some data there, and then they have some in the CRM, and then it's a spreadsheet, and then it becomes really difficult to evolve and get better if you don't have that data, right? So yeah, so that's a bit more of what we do. Typically integrate with HubSpot and Salesforce, NetSuite, QuickBooks, the typical players, hundreds of customers in 16 countries in US and Europe.
Yeah, I was going to ask the integration side because obviously that's
Yeah.
very important. So the major
Mm.
players or sources of data for you would be CRM systems, Salesforce, HubSpot, and then integrating into those, typical accounting solutions that you see for SaaS. So like NetSuite, Xero, QBO.
Yeah. It really depends on, you have sort of the big global players, right? And then you have, especially I would say on the financial side, you have definitely let's call it like the QBOs of every country, right? Where it's super integrated with all the local players when it comes to dunning or whatever it may be, or, so I think definitely have more of a variety there, but definitely those are the big players. But also, I mean, I would say like, um, like talking about like Avalara or say Taxiar or say Tax, for instance. But it could also be like if you go to Europe, they are very heavy on e-invoicing and PEPAL and sort of different standards for doing that. So then we can integrate with that. So typically often find ourselves as a hub when it comes to these kind of transactions anyway. And also their own service, pulling usage data, apps also providing, okay, what is the current state of a customer subscription if they want to do self-service or something like that with a customer. Yeah, very much like a hub.
Yeah, definitely. And yeah, I'd say the tech side definitely becoming more, there's more awareness around there now, just global sales and use tax compliance. Before you kind of, hey, let's just ignore it for a while, but it's going to come up in due diligence. Where do you
Yeah, yeah.
remit? Why don't you remit? Anyway,
Mm,
so
mm.
subscription management, right? Big topic, invoicing, quoting, rev rec, metrics, and so covering a lot of ground there with B2B SaaS. And I want to talk about revenue categories because things, SaaS 1.0 was subscriptions, maybe little services. Now we've got usage, transaction, consumption, all these variable revenue
Mm,
streams. Even I've
mm,
seen
mm.
more managed services, so subscription services.
Yeah,
So
yeah.
can Unium then handles it? And I think you mentioned it, then not only just pure play subscription, but also the usage side as well.
Yeah, so both sort of what you do know in advance, where you actually do know the quantity and you do know the
Mm.
price, but also like the number of APIs per month or the SMS sent or, some other kind of usage mechanism. So we do them both. And I think we do see a trend where more and more companies want to mix it up as well, right? So it's not one or the other. It's really like, okay, to optimize this in a good way, maybe we want like 70 to 80% being fixed and maybe 20, 30% being more variable. And we got a good mix of predictability, but also really, adapting to our customers' needs and do the most of it. So that's definitely something. I think we're really like in our space. I think there will be big leaps taken in the future as well. I think we're sort of maturing. Is that the right word? Right? It's sort of still okay to, don't have everything in place or, like you do some in a spreadsheet, whether I would usually think about like if you're running a manufacturing plant somewhere, most people I think would find it very odd if you weren't doing like an ERP instance where, and figure it all out and have all the data. But when it comes to software as SaaS, it's like, yeah, we can, why not do it in a spreadsheet? And I mean, that's not professional in the long run. So I think we will see steps and maybe, not only on the revenue side, but also like, okay, so what are the recurring costs? What are the recurring margins? And not only sort of in a P&L fashion, but maybe more granular and more detailed. in that sense. So yeah, I think we've got grounds to cover.
Yeah, yeah, definitely. And I recently released my fifth annual tech stack report, that
Mm.
focuses on SaaS companies. And yeah, spreadsheets, right? Still a big competitor, dominates a lot of categories. So, but like you
Yeah.
said, eventually, as we scale, we do have to move off that spreadsheet process. But yeah, very common, like doing a little rev rec in spreadsheets, metrics, etc. So, but still a major competitor, to a lot of
Yeah,
companies.
yeah. And I mean, in the beginning, it's fine, right? I
Yeah,
usually say that, the first invoices I put out, that was like the highlight of my month, sitting Word and doing my invoices. And that's fine. I mean,
yeah,
there is a time for everything, right? But
yep.
it, like, since it explodes, you sort of go in those spreadsheets in so many dimensions at the same time that it really, yeah, usually most get quite surprised when they bite back.
Yeah.
Yeah.
So yeah, big space to tackle. A lot of B2B SaaS companies around the globe, and everybody has to invoice, everybody has to do rev rec. So tell me so if going 6, 7 years now, so founded the company around 2017.
Yeah, yeah. So mid 2017, sort of slowly started in 2018. I would say that we took it quite slowly in the beginning, and then started to go a bit faster in 2019, 2020 when the pandemic hit. That's a very chair
Mhm.
timing, and then found good traction, and I think we've always been quite good at keeping our ICP quite narrow and niched, and based on that, it became very natural to see geographical expansion
Mhm.
as a growth alternative. So we've been doing that since 2020. So 2017 to 2019, very much Sweden, Nordics, and then after that up till now, very much about geographic expansion and covering grounds in that way.
And then talking about ICP or ideal customer
Mm.
profile, yeah. So tell us what is that sweet spot in B2B SaaS for Unium?
Yeah. So I mean, one thing is like we the B2B SaaS software is one very fixed thing, but then it's also like having a critical mass, I would say. As I said, there is a time for everything. And typically when companies are past that initial, pivoting back and forth, figuring it out, that's typically when we come in, maybe a bit geared towards they also maybe have external owners, maybe external requirements. So it's not only, the CEO who also does finances, who
Mhm.
also reports to himself or herself, but really some external requirements. More often than not, there's, some sort of CFO in place, whether it's like fractional or, but a certain, maybe you can call it a certain maturity or, an ambition to, on how you view financial side of the organization as well,
Okay.
I would say.
And then, so you're from Sweden, and where is the company located? Do you have a headquarters, or is it all virtual?
Oh, no, like this is like internal politics. I would say Stockholm is probably seen as the headquarters. We have a very like flexible hybrid thing. We do have offices, but it's yeah. My best word is a very flexible hybrid. So we have offices in Stockholm and Amsterdam, Netherlands, and Philadelphia. We also have a development hub in Malmö, Sweden. But then we have people, in Croatia, France, Poland as well. So there's really a mix.
Yeah, there's
It's very flexible hybrid, a good.
yeah, we don't need to be conflicting with any current HR policies on remote work right now. So that's create some internal politics.
Yeah.
But
Around
yeah,
60 people. So
I was
yeah.
going to ask
So
60, so about 60 staff
mm, mm,
who we could
yeah,
be upsetting right now. So okay, sounds
yeah,
good.
yeah.
So, and then anything you want to share around ARR revenue ranges?
Yeah. I mean, I think we've been quite open about that all the way. I mean, we started out a bit below $6 million US. I think we're going to end up somewhere between like 7 or 9 this year. So we're doing that, and we are also targeting cash flow profitability, in this year. So that is sort of the balancing act that we're doing. Let's see.
Yeah, no, that's great. Yeah, that's great. We'll see. Yeah, we'll see. Well, it's still a lot of the year left,
Still
even though,
quite an open range, right? Early in the
yeah.
year.
Yeah, sounds like public company guidance, this range. So tell
But
us,
we've been growing like
yeah,
50 to 70% the last year. And if you look at like over a 3-year period, it's like an average of 80 or 85% annually. So that's where we are.
yeah, that's great. That's great. So yeah, great growth there. And so going after, I'm sure, SaaS CFOs, others, but yeah, tell us a little bit about your go-to-market motion. How are you finding your prospects?
Yes, I think we are very much sort of coming originally from direct outbound and really, the the very not in fashion kind of go to market. But I think that was great for us because that leads to a lot of conversations and it's quite easy to learn a lot. And I think we were most comfortable with that as well. And then quite early we started also adding on more inbound motions and how to do that. Then I think there are so many motions in play right now. We've said that we don't necessarily see, PLG motion for now, at least. We still think there are a lot of companies who need some guidance and support. And I think it's important to meet the customers where they are, at least not in the sense of acquiring new customers. But then, we do a lot of like events. I think like what most are figuring out is like you can't really rely on one single thing. You really have to be multiple touch points. And I think especially for the kind of solutions that we're providing it's not easy to make that choice, right? It's quite a big decision. You as a buyer, you want to feel that trust. You want to be sure that this will work out. You don't want to be hanging with, some of the old stuff and also part of the new, but you really typically want to do like a clean cut and you want to, you know, like very much of a big bang. So all of that combined, I think very much supports at least some human support in the go-to-market motion.
Yeah. Yeah, a lot of mix there. And then let's switch over to the fundraising side.
Yeah, yeah.
Yeah, how much, because you recently had a round, but how much capital have you raised to date?
So we raised around $10 million. So yeah, I think we're sort of about, or the target is to be about 1 to 1 with our ARR. Yeah, and then cash flow positive state. So sometimes you can think that's quite a lot, and sometimes no, it's not. So yeah, but I think we've been quite cautious with what we've spent our money on, and tried to do a lot of like design and sort of analysis on like all these famous projections you do over 3 years that never turns out to be exactly right, but still like doing it and also incorporating a bit of the financing into that, not when you need it, but like how you want to scale your company. We've been doing that and I tried to do it as much as possible, sort of bottom up and not like, okay, first money and then figure out what to do with it. So
So 10 million to date, and then a recent round looked like close to 3 million euros, just under, 3 million euros. So let's talk
mm,
about that latest round. And
yeah, yeah,
yeah,
yeah.
yeah, what were you've been going on this journey 6 to 7 years. What was the trigger for that latest round of funding?
Yeah. I guess a bit of a like history before that. So,
Mhm.
we came out of 2021, everyone was really hyped up, right? And then 2022 took a bit of a different turn. We were also like building up organization and all of that. And of course, like sort of the second half of 2022 and a bit of a slow, I would say, start of 2023. And, you try to balance everything. But then we really felt like we had a great uptake in business the last half of 2023. And, like, okay, this is not the best timing for a company to raise money on one hand, right? But on the other hand, okay, we're feeling some good traction here and we want to do the most of it. And we see that there are a lot of companies who, need our help. Then we did a round and in the end sort of settled on a quite a balanced, I would say, financing round this time around as well. So really with the target of getting to cash flow positive, maintaining that momentum. We also did a bit of cleaning up when it comes to a loan and, a
Mhm.
few things like that as well. But I think the trigger was really that we felt like you have all these negative input from the market and around you. And after a while, you feel like, this is going, this is going quite well. And then I feel like that's a good time, right? That's where I want to sort of do a bit more. If it's happy days, then everyone will, do that. But yeah. So that was really the trigger, but then being a bit cautious of sort of the size of it and getting to that cash flow positive state. And I guess then we'll see. Let's see what the market has in mind for everyone next year. What's in fashion.
Yeah, you never know, right? And I've tried to make some predictions. I don't know if they've come out
Yeah.
right, but for the founders listening right now who are thinking
Mm,
about a raise in today's environment and just based on this last round, any
mm.
lessons learned in that process or tips that you'd like to pass on to the SaaS founder community?
Yeah, I think, it always takes more time than you think. And then, at least for me, it really, especially mental time. So it's not the time that you can plan for. I mean, it doesn't really feel necessarily like you've done that much either, but that sort of mental state. And I think like planning for it. I mean, having a good team around you, knowing, okay, this will be a certain phase and there probably will be an overload on some other people as well. I think that is a good thing to think about beforehand. I think another one is sort of that balance act of, the future versus what has been in all these dialogues. It usually starts with very much about the future, and then it quite quickly get drawn into the history. Okay, so what was the last year like, and what all the tangible things. And I think you need to do that, and there is a reason for it as well. But I really think sort of reminding yourself that it's a balance. And I think in the end, I think a fundraise will always be about the future, not the past, right? But we spend a lot of time in the past. And I think, balancing that and thinking about it could be a good thing as well. And then finally, sort of raising when you don't need it. And maybe that is a bit of a stretch, but at least like don't wait too long, but really I think it comes back to what we spoke about before about planning. If you incorporate that a bit into your planning and your design of the company, really helps as well.
Yeah, no, great advice and experience there. And I just had that conversation with some about, planning that raise and cash runway. So yeah, don't wait too long. But Nicholas, you've grown this into Unum into a really nice sized business. So, today, do you have a favorite number or metrics, or it could be multiple that you focus on to guide the business?
I mean, we've had one metric that we've always been, focused on for the whole company and from the get-go, and that has been the contracted ARR. So that's always been sort of the number. I mean, that's of course a bit of a lag metric
Mhm.
in that sense. It doesn't really predict, but I still think it's super, super relevant. So that's definitely been that. We've also been quite cautious and looked into sort of the contracted ARR divided by basically all the sales and marketing expenses. Today it's also for us the RevOps, but like everything that costs money, and try to keep a good ratio between those two numbers. Yeah. And then yeah, I also think like what has helped me a lot is sort of we've had quite a good sort of connection as well between contracted ARR and cash flow in. So for me, eh, it really helps me because I mean, in the end, cash is, what pays bills and everything. So by knowing the contracted ARR, I also have a, really good idea of the cash in, and cash out is always so much easier to
Mhm.
budget and plan for. So that has been really, really helpful. I don't know if that that is in any way like a universal rule or anything, but like finding, maybe look for those connections. Like how can you, because cash flow is really difficult to sort of forecast and predict. And there's all the ups and downs, and then there's regulations, and yeah, it's complicated. But if you can find something simple, I think that really helps. And that has helped me at least.
Yeah. No, I love that, car number contracted ARR, because yeah, cash burn, net cash burn, cash runway is not an exact science. Like for me as a CFO, there are a lot of different data points I'm trying to triangulate to figure out what
Mm,
that is. And you can't just look
yeah,
at, hey, it's this number, but no, it's a lot of numbers and it's always changing. It's based on this financial profile, your future financial profile. So,
yeah,
yeah, yeah, the whole contracted ARR, thinking about, yeah, what are those total billings that I'll be sending out this year that I know are going to happen? And then, yeah, your expense base. I love love that perspective. So Nicholas, as we wrap up here, really appreciate your time. Tell
yeah.
us what's coming up next for Unium. I know you have some nice growth plans, but what's coming up next?
Yeah, we actually had a very surprising quarter 1. That's usually the slow period, but like a better Q1 than Q4. And Q4 was good. So, I mean, in the short term, it's really about serving new and existing customers. Very, very simple. But more long term, I mean, our mission is to provide it, we want to provide one single platform with a lot of functionality that works, but also to help companies to operate, but also scale and develop their business. That's been sort of our motto. And I think we've done a lot of work on the operate side. And I think that is really the foundation of it all. But really then looking into, okay, so with that in place, and if that is running smoothly, and yeah, there will always be more things to do, but also like, okay, so what are the next steps around, helping develop and expanding their business? So that is where we're putting a lot of effort, and R&D roadmap as well. Yeah. So
Yeah, I'm sure.
hoping that we will do a bit more in the near time for both existing customers and new, and that they don't need to sort of buy 5 systems to do it, but can really do it in one place. So that's one thing. We're probably gonna stay within our geographic sort of coverage, but really dig deeper. Yeah.
Yeah, always a lot to work on, the never-ending product roadmap. So yeah,
Yeah,
I
yeah.
understand. Yeah. So, Nicholas, really appreciate your time today, sharing your long and continuing software journey here now with Unium. So, if listeners would like to learn more about Unium, where should we send them online?
Definitely LinkedIn. I think that is our main channel. All categories. Definitely our web as well. I think we start to grow a bit of a following around our pink cap, which they are online, but they definitely originate from events and other more in-person gatherings. But definitely LinkedIn and our web www.unium.com. So where we're at.
All right. Well, perfect. Again, Nicholas, really appreciate your time sharing your experience and journey so far. So, listeners, if you'd like to check out Nicholas and Unium, check out unium.com. Also, checked out LinkedIn. And again, Nicholas, thanks for your time today.
Thank you so much, Ben.